Good morning, and thank you for joining the Bigtincan Holdings half-year FY24 results investor briefing. My name is Jane Morgan, and today I am joined by Bigtincan's CEO and co-founder, David Keane, and Global Head of Finance, Cyril Desouza, who'll be providing you with an overview of today's half-year results release. To ask a question throughout today's presentation, please use the Q&A function, which can be found at the bottom of your screen. David, I'll hand over to you.
Thank you, Jane, and welcome all to Bigtincan Holdings' first half FY24 results call. My name is David Keane, the CEO and co-founder of Bigtincan. And joining me here today is Bigtincan's Global Head of Finance, Cyril Desouza. For the call today, we'll be using the first half FY24 results presentation that was uploaded to the ASX this morning and is also available on our website. And a recording of this event will be made available on the ASX and on our investor website after the conclusion of the event. Before we begin reviewing the presentation, I thought I might provide some remarks about our progress in the most recent half. First half FY24 was an impactful period in the journey of Bigtincan. As folks who follow Bigtincan know, for most of calendar 2023, Bigtincan was engaged in a potential change of control process that added significant workload to an already busy team. That process formally concluded in November 2023, but certainly had an impact on the company, particularly in Q1 of FY24. That period, together with the changes in the macroeconomic conditions, was a headwind for us that required the company to extend its cost adjustment program that had been ongoing throughout calendar 2023, with the goal of delivering sustainable financial results in terms of EBITDA and cash flow. And at the same time, the business was focused on executing on the product transition and building its understanding of the impacts of AI technology that is now key to our future. So given that, management's goal was to create a platform to build from, to create a place from which Bigtincan can deliver its best results and help thousands of the world's leading organizations to create the buying experience of the future for their customers. And we feel these results show that progress. I want to start by thanking the entire Bigtincan global team who delivered for the business, the customers, and each other during that challenging time. You guys are amazing, and thank you again. Now, whilst going through those challenges, the team has overseen that transition to EBITDA positive results that investors have been looking for. For the 6 months, Bigtincan was just under $2 million EBITDA positive, an improvement of over 100% from first half FY23, and the company reduced its operating loss by more than 40%. Whilst at the same time, Bigtincan continued to invest in creating those underlying technologies you will see us talking about today that will be fundamental to our growth in future periods. In fact, our AI technologies present opportunities for stronger growth. You'll hear from one of our enterprise customers today, Siemens Electrical, talking about the impacts of these AI products. So for today, the takeaway is that whilst we need to remain vigilant of changing market conditions, Bigtincan is well positioned to build on its EBITDA trajectory and continue to extend our platform to create the buying experience of the future for our global customers. Okay, let's start with slide 2, first half FY24 highlights. Today, for the results presentation, we will be highlighting 3 areas of progress: financial, customer, and technology. Let's talk briefly about some highlights in each area. In financial, Bigtincan made the transition to sustainable EBITDA positive results, with that result of $2 million, delivered from a focus on its core and most profitable revenue, whilst continuing with the business adjustments we spoke about. In terms of technology, for the 4th year in a row, Bigtincan was named a leader in the Aragon Research Globe for sales enablement platforms. And we released Genie AI-based products you'll hear more about today. And on the customer side, the business continued to win new deals and grow existing customers. And the Modus acquisition that we conducted in the half also helped by adding to that EBITDA position and helping to build a stronger customer base in a period that was challenging in terms of customer retention and contractions. Let's turn to slide 3 and talk a bit more about the financial pillar. So slide 3 is our divider. And let's go on to slide 4 and talk about the dashboard. Thank you. Let's start with the dashboard. Overall, the focus of the half was that transition to positive and sustainable EBITDA through both strategic cost management and a focus on the more profitable parts of the customer base. Overall, whilst revenue was relatively flat versus first half FY23, including the impacts of the Modus deal, there are some significant takeaways. Firstly, the company executed on that with investments in sales and marketing reduced by 25% as the business adjusted to focus on the core business and away from the more expensive to service customers. R&D reduced 12% and capitalized R&D costs reduced by 24%. again, with the focus of that investment into both the core platform and the AI features you'll hear about today. The impacts of this were that 40% improvement in the operating P&L position and that more than 130% improvement in EBITDA. In terms of cash, the business faced significant headwinds in Q1, as we spoke about before, that impacted cash flows, but that turned around significantly again in Q2, and we're seeing that positive momentum ongoing in Q3. Let's now jump to slide 5, and talk about that revenue progression. As discussed, whilst revenue in the period was flat against first half FY23, business adjustments were made to focus on the best quality revenue, which we see delivering long-term improvements in the quality of the global customer base. Q1 saw elevated contraction and churn driven by those macro conditions and resulted in the business adjustments that we made, leading to a focus on the core customer base in Q2. Now, importantly, Q2 FY24 saw net growth, with our overall SaaS total contract value committed to the company increasing from 168 million at June 2023 to 179 million at December 2023, representing the extended contract lengths of our customers. The acquisition of Modus contributed positively to revenue and also to EBITDA, and we'll talk more about that later. But for sure, adding that customer base and its lower cost of operations helped in a tough period to improve earnings. And we see expected revenue expansion opportunities to occur throughout 2024 in that Modus customer base. Now on slide 6, let's talk about the ARR. As discussed in the revenue slide, look, Q1 was the most challenging quarter we've faced in a number of periods, as the company experienced increased contraction from existing customers in ARR bookings and increased churn as the business adjusted to focus on the profitability we spoke about before. And, we experienced the maximum impacts from that ongoing change of control process and macro conditions in Q1. As we talked about, Q2 was that significant turnaround as we saw churn mitigating, ARR increasing, and Bigtincan achieving a net retention rate of 102%. Now, it's great to see the NRR, net retention rate, back at greater than 100, which is where I certainly believe Bigtincan should and can be on a sustainable basis. I'm now going to pass over to Cyril Desouza to run you through the next slides. Cyril, over to you.
Thank you, David, and good morning to everyone. During the half, Bigtincan continued its cost adjustment process with changes in investments and a number of areas resulting in the overall operating spend per quarter reducing. From a P&L cash cost perspective, the business reduced the base rate from 34 million per quarter in Q1 to approximately 26 million in total for Q3 FY24. So we expect 52 million in total for the second half, slightly less than what we presented at the AGM, which was 54 million for the half. As you can see by the column on the right-hand side, our current annual cost run rate, which includes cost of sales and our total operating cash costs, is now 104 million, and this includes capitalized development costs of 10 million. This represents a significant reduction from previous periods, and these adjustments have been made to focus on ensuring that Bigtincan is well placed to continue as we execute our technology build plans, our customer care programs, and also grow into future periods. Moving on to slide 8. In the first half, we saw the ongoing improvement of operating leverage, despite revenue being in line period on period. Both sales and marketing and R&D improved as a percentage of revenue by 43% and 26% respectively. As you can see in the bottom left-hand table, there is an overall improvement from 45% in the prior period to 69% in this half. This just demonstrates again the efficiency that is being put in place by the Bigtincan business as it transitions to one of profitability with a focus on accretive EBITDA. Moving to slide 9. The result of the changes we've spoken about was the material improvement in EBITDA we're reporting today, and a position where the improvement is not just sustainable, but a step up as we continue into the second half of FY24, as Bigtincan remains on track to deliver 10 million in EBITDA and in excess of 15 million in adjusted EBITDA in FY24. The business has made adjustments where appropriate to maintain sustainable revenue levels going forward. Whilst EBITDA for the period was 1.9 million, it should be noted that EBITDA in Q2 was just over 4 million, which gives the business confidence to deliver EBITDA for a full year in excess of 10 million. I will also note that this period the FX moved against us, and on a constant currency basis, our EBITDA for the half would be higher by 10%. Moving on to slide 10. The cash flow was mainly impacted by the revenue and ARR of Q1, as alluded to by David earlier, and this reflects the reduced cash receipts. However, during the quarter, the business reacted and made further changes, which in turn improved the cash position in Q2, with Q3 continuing to show that progression, with the business on track to achieve 5 million plus of free cash flow in the second half of FY24. Just a note for investors, on the Regal facility, which is due for repayment in September 2024, the company has a number of strategies in place to address this, including the ability to refinance, replace, or retire this debt. Thanks, and back to you, David.
Thank you. Thank you, Cyril. Okay, let's talk about technology. I mentioned before the recognition from both Aragon Research and featured customers this half. The ability for Bigtincan to continually achieve this level of industry recognition just reinforces that we're making the right decisions to build a long-term leader in the market. And I thought it would be insightful for investors today to review again the platform that Bigtincan has been building that delivers that leadership. So on slide 12, let's talk a bit about that platform. So our team has created what is undoubtedly one of the world's leading fully integrated sales enablement platforms. And you can see here how we address the key requirements of the market and where we have added unique differentiation to our technology that sets us apart. In fact, it's been this platform that has been instrumental in some of the growth in Q2 FY24. In terms of multi-hub and its impact on retention, we saw multi-hub generate 122% NRR against an overall NRR of 102% for Q2. So for investors looking to understand the platform more, we have been updating our website at bigtincan.com, where you can see the complete platform vision come to life. But on slide 13, let's talk about the impacts of generative AI in our world. So as important as the complete platform is for the business and the impact on our NRR, AI technology is adding value directly to our customers and presents opportunities for growth in 2024 and beyond. This slide shows why Bigtincan is so well positioned for AI technology. Building on our data set of over 100 million interactions, and I can tell you it's substantially more than that, we have one of the largest data sets for AI in our industry, and we see that helping us to create a complete set of AI offerings. The investments Bigtincan made in first half FY24 to bring our first AI products to market and to create the underlying scalable system are key to that future. Let's go and talk a bit more about what we launched on slide 14. Thank you. In the first half of fiscal 2024, Bigtincan launched Search AI and Genie Assistant to empower customer-facing teams across our customer base. These AI technologies address the challenges faced not just by salespeople, but by sales managers and subject matter experts who are time-constrained and may struggle to provide individual coaching or product and sales support to their teams. Search AI provides content-aware answers to specific seller questions and directs them to permission-based documents, whilst Genie AI enables sellers to draft professional emails instantly based on a company's products and messaging. Additionally, Genie Assistant's prompts are designed to address more complex problems, resulting in a distinct user experience from Search AI. Furthermore, Bigtincan's introduced authoring AI with voice cloning to add value to the customer base using a mix of AI technologies applied to the Brainshark product. And of course, this enables translation for our global customers in the tool. Overall, Bigtincan is well positioned for AI in 2024, offering one of the industry's leading implementations and with more innovations on the horizon. We'll be showcasing these AI technologies and more in our annual Investor Product and Tech Day coming in Q4 this financial year. Okay, let's get back to our agenda and talk about customers. We have a customer divider slide. Let's go to slide 16. Cool. So new logos and expansion. We had more than 50 new logos and 250 expansions in the half, about on track with previous periods. And yes, I do want to briefly talk about the Align deal. That deal is a $5 million total contract value deal, and that makes it the second largest TCV deal in the history of Bigtincan. This is one for folks who say we don't win big deals anymore. Well, this won't be the last one, and we believe as the economy enters a new cycle, there'll be ongoing opportunities for significant deals. Some names of other new and expand customers in the half include Bosch, Bayer, Siemens, Lion, Abbott, Nike, Fathom Pharmaceuticals, Mayo Clinic, 3M, eBay, and more. But I want to talk a bit about one of those customers on slide 17, which is Siemens Electrical. So Siemens, of course, is a manufacturer in a competitive landscape that needs to differentiate from the pack. They need to add value when product and price are virtually the same. Well, how can they do that? As David Quatella, the North American marketing manager for Siemens Electrical, says, the ability to take existing content and repurpose it to meet a market need or to provide a sales enablement tool to someone new to the industry and make them and their customers look like the smartest ones in the room is a game changer. And as David adds, factor in the possibilities of Genie AI, and Siemens teams and customers now have a virtual assistant on their person anytime to answer their electrical and power distribution needs as it pertains to Siemens products and services. You know, AI technology is already generating revenue for Bigtincan, and we're excited to see how it impacts the business through 2024. Okay, let's look at the strategy and outlook for FY24 and beyond. Let's start with slide 19 on the strategy. Look, I always think it's worth talking about Bigtincan's clear strategy to establish ourselves as a globally competitive, profitable, and scaled leader in sales enablement. Firstly, we are committed to building the software products that directly contribute to the revenue line of our customers. You know, these solutions become connected to the success of our customers, and that revenue line focus is about creating the buying experience of the future for our customers' customers. Secondly, our strategy is based on delivering a complete platform through an end-to-end software architecture that we call the Bigtincan Intelligent Enablement Platform, or the IEP. The IEP provides this ability to deliver improved insights for our customers, but also delivers lower operating costs and improved cross-sell opportunities for Bigtincan. Our third pillar is innovation to grow existing revenues and win new customers. And this is not just about adding features. It's about expanding our offerings and growing existing customers and winning new logos. This is how we will build trust and win in the market. And finally, operational efficiency, as you've seen today, remains a key pillar of our strategies. The synergies we've achieved through both M&A and our organic programs have contributed here. You know, overall, these pillars are designed to support and grow shareholder value and the business as a whole. Talking about those revenue opportunities on slide 20, I think it's worth talking about some of the upside opportunities for the business. We see three opportunities in front of us right now. Firstly is a return to a more positive macroeconomic environment. You know, market analysts expect about a 25% compound annual growth rate through 2030 in our market. And whilst I would say market growth did not reach that level in 2023, I would say that 2024 outcomes depend on overall macro conditions, including US inflation management, but for sure there are opportunities in the changing cycle. Secondly, we see the platform strategy working. We're setting a goal of 50% of new revenues coming from multi-hub or platform sale in FY25, adding to growth and improving retention. In fact, this was a driving force behind that result of 122% NRR in terms of multi-hub in Q2. And thirdly, on AI, we're predicting a 20% attach rate, and we can see as much as a $20 to $30 per user per month bump in revenues as AI becomes more commonplace. You know, these opportunities are about extending what we do for existing customers and winning new deals. Okay, on slide 21, let's talk about FY24 outlook. So let's talk about that. Post these results, we're in a good position to build on the platform that we've created. We're setting an outlook for revenues of 120 million plus, with the final outcome being linked to Bigtincan's retention and ability to win new logos and expand existing customers this half. And we're confident we have a strong pipeline to get there. In fact, as of the end of January, we already have $108 million of locked-in revenue for FY24, and the team is working hard to close the remaining opportunities. On EBITDA, as Cyril said, we are confident that number being in excess of $10 million. And on cash, we're seeing a free cash flow position of 5 million plus for second half FY24, built on a positive result in Q2 and ongoing positive results to date in Q3. But I did want to talk a bit more about some of the longer term strategies we have and where we see this company going. I think it's important to give a bit of a view to that longer term position. So as we look further into the future, into FY25, our vision for Bigtincan is clear. We're not just building a product, we believe we are creating the buying experience of the future for a global customer base. In FY25, we see a return to organic growth driven by this improved quality customer cohort and executing along these strong product development strategies. We've set an EBITDA margin target in excess of 10%, reflecting our dedication to not just grow, but grow profitably, with fiscal discipline coupled with strategic investments to drive us to that goal. And innovation remains at the heart of our mission. As AI technologies become more mainstream, we anticipate multi-hub together with AI features that will improve retention and grow new logos. Bigtincan is well placed to redefine the sales enablement landscape and create a buying experience that will set the standards for years to come. So that's it for our results. Really appreciate everyone tuning in.
Wonderful. And thank you all for joining us for the Bigtincan Holdings half-year FY24 results investor briefing. If we have missed any of your questions, please feel free to reach out via the contact details, which can be found at the bottom of our ASX releases. But we look forward to hosting you next time.
Thank you.